You're all very welcome this morning to the first in a 5-part series that we refer to as DORA Deep Dive. We're looking at the 5 pillars of DORA in individual sessions, and we're going to go deep. And indeed, it is really the weeds we're getting into today. Really, 45 minutes probably isn't half enough time if you want to do the detail, but I will try and keep it moving forward and give you a sense for what I've found. Okay, let's keep moving because we're going to use the time. I'm joined today by Fiona Kiley. Fiona has also done the deep dive into the regulations and indeed the technical standards, which we will cover as well. I asked Fiona to join us because she's fairly good on European regulations, EU regulations, and in particular this one. Okay. Briefly, a couple of introductions. We've some new people joining us today that haven't been on other webinars, so quick introductions, quick overview of DORA, but I'm sure most of you are quite familiar with it. And then to the meat of it, we look at the pillar of the information communications technology pillar and what the requirements are. And then we look at what the technical standards are looking for. As you know, they were recently published and they go into great detail as to what you have to do. So first to us, we see ourselves, like many of you, compliance and risk professionals. We try to keep our skills sharp by being members of various institutions and groups, and certainly conversations with you keeps our skills sharp as well. We make a governance, risk and compliance solution, also called calQrisk. It's in the cloud, and specifically we've got a DORA solution. So if you want to do checklists or indeed produce the register of information, we spent a bit of time earlier in the last quarter putting that together. We also provide a risk advisory service for people who don't have their own risk officer. Can sometimes be good to have a sounding board. And yeah, calQrisk is used by, I think I'm going to have to revise that figure. We've been growing at about 35% for the last 3 years, so probably time I updated that. But as you'll see, we're in the financial services sector primarily, and then some not-for-profit areas like housing associations, charities, and the public sector as well. I like this one. I always try to have a new quote, and I'm surprised I hadn't come across this before. But yeah, rules are not necessarily sacred, but principles are. And I think I'll refer to this a couple of times today. Okay, first the overview. You know it's a regulation, so it applies to all member states equally. It's not a directive, it's a regulation, so it's law. And it came into force 2 years ago, or nearly 2 years ago, but it'll be applicable. So really coming into force on January the 17th next year. So hopefully you've all been doing your homework and are well on the road. But maybe today is about you checking to see and comparing where you are with how I'm describing it. It applies to all financial entities. About 22,000 entities in Europe are covered, and those outside of Europe who are supplying ICT services to financial entities within Europe. Briefly, it's about making ICT systems better in the sense that they're less likely to fail, they're more secure, and if they do fail, you can get them back up again fairly quickly. It harmonizes, I think, and improves several guidelines that were out there. Each country and each jurisdiction had various rules, guides on outsourcing, guides on cybersecurity, and I think this brings it all together. But the interesting thing is a comment I read, which was it's not just about ensuring operational resilience, or it's closing a gap that ensures that organizations aren't just putting some money aside to cope with the attack or the crash. It's more than money. It has to do with the stability of the financial system, and I think that's why the regulators are so keen to enforce this. So these are the 5 pillars. Today we're focusing on the risk management framework, the ICT, that's information and communication technology framework. Over the course of the next 3 months, basically, we'll cover the other 4. So third-party risk management, incident management, resilience testing, which is interesting because they go into every single possible test you can do, not just scenario testing, but pen testing. And then information sharing. Interesting that gets a whole pillar of its own, but it's about sharing information with others, and you will learn from other people's mistakes as well, and their experiences. When I first looked at this and started looking at the detail, I thought it was what I call a holy God moment. Just the detail alone in the regulation, and I started to do a mind map. Don't worry, I'll show you the detail in a moment. And I thought, governance, identify, protect, detect, respond, recover. That's the NIST 2 framework as well. So I already had a mind map for that, and I thought, well, maybe I can just reuse that. But when I started mapping DORA to NIST 2 in that framework, it was slightly different, shall we say. But I plowed on, and I've put most of it into that framework. Happy to share this with you as well. So let's have a look. There's 12 articles here, from 5 to 16. And I'll go through them briefly, each of them briefly, so you get an idea of what's required. And then we look at the technical standards. So the first 3 on this really are governance. You'll see noted by the color yellow, but they've got different names in it. And the first thing to note is that the person driving this should be independent. So you can't have the person driving this being the head of IT, because they'd have a conflict of interest. It's a controlled function, so it has to be somebody who's independent. That's first of all, and having a control framework. So like any governance, it's about the arrangements, and really the meat here is in the section here called approval and oversight. You got to have policies about availability, authenticity, integrity, confidentiality. And for those of you who are, let's say more my generation, you would have remembered CIA, confidentiality, integrity, and availability. That was the acronym for information security. It's interesting that in recent years, authenticity has crept in there, because do you really know who that message came from? As one concept of authenticity, that it's the origin is can be believed. Or when somebody's logging into a network, how do you authenticate that user? And increasingly, we're having to use multi-factor. But look, I won't go into detail of each of those. That's just so lots of policies. Policies also on third parties and outsourcing, and when do you outsource and who do you outsource to? How do you choose them? Policies on business continuity and incident response. This is, if you like, the arrangements you got to put in place for good governance. There's no surprises here. Responsibilities and authorities. Again, no surprises here. Setting your risk appetite or risk tolerance. How much risk is acceptable? What impacts? And you'll see from other guidelines, the impact tolerances. When you do have an incident, what's acceptable? What's unacceptable? All of these good things. Internal audit plans, because you have to have somebody independently verify that you're actually doing what you say you're doing. And it's good to see this in a framework as well, a budget, that the company actually puts money aside to do this and to do this properly. And reporting, again, all part of governance, that you set up these arrangements. You need the feedback, you need the reports to tell you if you're achieving your goals and if it's working, I guess. On the risk management framework and protocols, still in yellow, so I still see this all part of that governance, that you need to have policies and procedures down at the information technology level, covering hardware, the software, the physical infrastructure, that everything has to be considered, and where you would place the equipment and the security around the equipment. Again, still part of governance, the segregation of duties, that the risk management and the control function are separate. The internal audit is separate and independent. This document review, continuously improve, to my mind, that's plan, do, check, act. You plan something, you do it, you check that it's working, and you improve it where you can. You've got to have that mindset of continuous improvement. It comes through in many elements of DORA, that you have to have that continuous improvement, I would say, attitude. And then down to the digital operation resilience strategy. Again, this is, if you're going a level deeper into the setup of the information and communications technology risk management. And the first one there, I would call out alignment with business strategy and objectives. This is so often I see a misalignment between what the IT department is doing, where the business want to go. I think we need IT people to get more of a business hat, I think, to get closer alignment, because it is, after all, it's the IT that is supporting the business achieve its objectives. Risk appetite and tolerance, we covered. Security objectives, key performance indicators, architecture, all of this strategy has to be considered and aligned. I keep saying aligned with the business. Yes, you want to have intrusion and incident, maybe prevention and detection measures. All of this, I know, guys, you're doing all of this, but it's spelled out here very clearly. What you need, and the resilience testing. How do you know your measures will work in the event of an incident? You got to test them, and there's a big whole section on testing, which we'll come to in a few weeks. Have thought about how you're going to communicate to your customers, to your staff, to your other stakeholders if you do have an incident. And again, there's a whole pillar devoted to the third parties and your whole approach to outsourcing and how you manage those outsourcing. So from a resilience point of view, from an IT point of view, you're still responsible. Your information is maybe on servers in somebody else's computer room. So from an IT risk management point of view, you need to have a strategy to address that as well. So systems, protocols, and tools, yes. And the key word here is a proportionate. And we'll see later, there's a simplified, if like regulations for the smaller, or I call them exempted organizations. But you need tools, and you need to spend enough proportionate to the, I suppose, the risk you pose to the whole financial system. Interesting that they pick out peak times and stress market conditions, that you have the capacity to cope with those stress times. I find this incredibly detailed instructions of what is expected. Having I suppose done all this at one level, that some regulator would come in and say you got to be ready to flex your capacity up 35%, when it gets stressed or whatever. I would have thought this is the sort of stuff one does without having been told to do it. Okay, so assuming you have all that governance stuff in place, identify, classify, and maintain. Clearly I would say if you haven't identified your assets, if you haven't identified the sort of things that are important to you, then you can't tell me that you're protecting them. So first thing is identify them. Identify those critical business functions, and make sure that there's somebody, with the role and responsibility to look after that. Identify your assets. Any asset you haven't identified is potentially a weak link in your infrastructure. Identify risk. And again, an unidentified risk is one you're carrying unwittingly. Not just the cyber threats, and the vulnerabilities, but it can come from people as well. And in this, somewhere in here is about cyber awareness training. And I would say 50% of your problems are going to come from the human weak link rather than a system weak link. I'm often asked, how often should you do a risk assessment? I mean, I see people doing it once a year and think that's risk assessment, but you need to risk assess when something changes. If there's a new regulation, or maybe one of your competitors has a serious incident, you've got to ask the question, well, could that happen to us? And maybe re-risk assess. But certainly on any change in the context, that's when you should. The regulator specifically picks out legacy ICT systems to do a yearly assessment, or on change, of course. And that's, legacy issues. Identify all the critical assets. Now, critical asset might be, your definition might be those that are supporting critical functions, however you define them. Identify them, and the interdependencies. What good is an asset if something that it depends on has failed as well? So whether that interdependency is a third party, or another system, or a facility. And identify your third parties. Again, I'm thinking of, if I'm responsible for IT risk in the organization, it's the expanded organization. It's those other third parties who are now part of our organization, certainly for the purposes of ICT risk. Because again, your third party, they might be the weakest link. You might have strong information security controls. I think you should expect the same high level of security from your third parties, especially if you're giving them access into your network. Okay, identify, protect. We might have to move faster on this, folks. There is a lot. Protect and continuously monitor. You find this in detect as well, in NIST, but we won't go there. But yes, continuously monitor, and that's an interesting one, because I've seen the word continuously come into 27001 and into NIST. It's not just monitor. It's about that continuous nature of it, because you can't look away for any length of time. If you've identified all your assets and all the areas that you need to cover, now you've got to have the appropriate policies and procedures and protocols and tools that are proportionate to what you're trying to protect. I think on the infrastructure, and you'll hear more of this about isolating mechanisms. I mean, one of the first things you're going to have to do if you've got a cyber attack is to isolate your network from the users, so that you're limiting that spread, you're containing it if it came in one segment. So that should be certainly in the infrastructure. And this has been called out by the regulator as well. I would imagine that most organizations today are doing a good job of identity management and authentication and access to systems, but still you will find that particularly with the movers in an organization, that can accumulate rights and instead of having them modified. But and physical access, and again, I see this has risen in prominence in the last few years, and you hear some horror stories of bad guys having the what would I call it, the unbelievable courage, is it, to walk into organizations. I heard one story last week where the bad guys put a notice up on a door saying, "Do not close this door," and people obeyed it. And it was a door that had normally physical access, and they were able to move in and out and steal some stuff. But scary. Change management is often where things go foul. So there's quite a bit of detail in change management when you get to the technical standards. I was surprised at that, but yeah, I know personally, change, things work fine till we make changes and then it breaks. Very, very conscious about availability here, and there's a lot you need to do there. So detect. So you've put all your protections in place. Will you know when the bad guys are in your systems? Now, if it's ransomware, you'll probably know straight away. But if it's harvesting credit card details, or maybe just customer information, client information, they're stealing identities. They're looking for stuff that will help them maybe steal other stuff elsewhere. So don't just consider the ransomware attack. It's the bad guys in your systems, and depending on which report you read, it could be 98 days or 204 days that they're in systems before they're detected. Common thing now is to detect anomalous activity, behavior. So you react to that. But the more seminars, webinars I go to, the more you hear of so many alerts coming from systems. Now you need tools to be able to filter those alerts, and using AI as well to focus on the ones that are serious alerts that you need to investigate. that's all I will say on that one. I think it's you need certainly an amount of technology, but you also need, I would say, to know how to react. It's when you have that, when you do detect something, that you need to respond and react. And the response might be, as I said, cutting the connection to the network. On respond and recover, I've put these two into one mind map here. And I'm not going to go through everything on these maps as you've seen, but to try and give you an idea. A lot of emphasis on the business continuity plan. And I think that's because traditionally most people would have the incident response, crisis management, continuity management and recovery in a business continuity plan. And of course, those plans are still valid. So it's kind of building on that, I think. So business continuity policy, covering plans, the response to limit the damage, containment, recovery procedures, all of this going in your policy as well as in the plan. And plan review. Again, like any plans, they can go out of date fairly quickly if there's a change in the context. But testing the plans, and there's a whole section on testing your resilience and testing plans. And I can quote one that probably my most frequent quote is Eisenhower: plans are useless, but planning is essential. And it's that planning, that thinking of contingencies and what if, that is where the work is done. The plans you have, you won't predict the next attack, the next disaster, the next serious incident. But if you've got well thought out plans and you've done that thinking, then you can probably adapt those plans to the next major incident. Before you do any business continuity plan, you have to do a business impact assessment. And if you've been compliant with previous regulations, the one where you had to, I suppose in Ireland, certainly the central bank brought out guidelines 2 years ago, and you would need to identify your critical systems, identify the dependencies, identify the impact tolerances. All of this is just really covered under business impact assessment. So where you identify those processes or functions and the dependencies. That's all in here. Crisis management function, incident log. That's interesting that, again, this detail that they call out in the regulations. It's easy not to do this, but it's well worth doing, that if you have an incident, that somebody is tasked with writing down what you're doing when, with the time, the decisions made, because when you want to review this afterwards and you've got that time log as well, you will actually find you can improve things by changing the order possibly of how you did things. Integrity checking. I'm not sure why it's under respond and recover, but maybe when you put systems back together again, certainly you need to do a reconciliation and ensure that there is a harmony between systems and that it will work. Okay, that's the end of the mind map. Just on the other articles, backup policies and procedures. 3-2-1. Having 3 copies in two different media and having one offsite is what I would say. You want to have, if your operation was totally wiped out, that you have a copy of your backup information, of your information somewhere else that's not on the network and not physically in the same building. Learning and evolving, a whole article devoted to that, to gather information, but not just learning from your mistakes, but learning from other people's mistakes as well. When you review incidents, and this is an important task, that I won't say criticize yourself, but review the incident, how it was handled critically, and say, could you have responded better? The forensic analysis is important, and you probably need to have an agreement already with an IT forensic company who can come in quickly and tell you how bad it is, because the regulator will want to know, and not 2 weeks later, but they'll want to know within 3 days how bad it is. So you'll need the forensic analysis quickly and done well. And most organizations don't have that skill in-house because you're not using it every day, so you wouldn't have the skill, I'd imagine. escalation. You want to know if you've got a serious attack that gets to the highest point of the escalation path as quickly as possible. And don't forget communications. Now, we will come back onto incidents, so I'm not covering it in any great detail here, but communication, yeah, especially in incident management. But again, I'll cover this probably in greater detail when we look at incident management. Now, for those of you who are the exempted, who don't have to comply with everything, the Article 16 gives you a summary of the areas, and it's probably that proportionality. It's probably everything that we spoke about, but not as onerous. And certainly, and I'm watching the time here, I want to cover some time on the how. So we've known about what you've seen there for the last 2 years or year and a half, and I've flown through it. A lot of detail in that. But earlier this year, the how, I call it the how, the regulatory technical standards. And this was, if I'm using the phrase correctly, a delegated regulation, where the Commission had delegated this to a committee to come up with the detailed technical standards that are required. And these are over 41 articles. Now, I'm sure most of you have cast your eye over them already. I've put in brackets here the number of requirements that we estimate is in each of these articles. There's a total of 396, or actually just a total of 303 detailed requirements. But if you're an exempted organization, then you just have 93, and they're in articles 28 to 41. So certainly decide, maybe you have decided already, you're in the exempted category, and you can, it's much easier to cope with 93 than 303. But you'll see if I go to the next one, this is incredibly prescriptive, I think, and surprised that in all of the standards and information security standards that I've read, and take 27001 and NIST 2, and even the public sector cybersecurity one, none of them have 303 detailed requirements. If you take Article 10 here, vulnerability and patch management, and I'm just taking out, 2 out of that. The vulnerability management procedures referred to in paragraph 1 shall verify whether the third-party providers handle vulnerabilities related to ICT services provided to the financial entity, and 2, whether those service providers report to the financial entity at least critical vulnerabilities. It's quite prescriptive, and if you haven't already tackled this, it's going to be a challenge, because now I would imagine most of you have a lot of this already from, you've been doing this for years, but this is yet another, if you like, standard that you have to comply with. I'd imagine the first thing, if you haven't done it already, is you've done a gap analysis to see, well, what do you have already and where are the gaps? And this is where I'd come back to the principles versus rules. If these are the rules, and there's 303 of them, you might feel that what you're doing already, where it might be as prescriptive of this, but you're covering the principle in terms of protection, in terms of authentication, in terms of testing. My opinion is that you won't get beaten up. You still have to comply with this, but if you're well on the road, then at least you're able to demonstrate you're complying with the principle to a great extent. Now, I'm sure Fiona might have a comment on that. That is a personal opinion. It is a lot of work. I know this from reading the detail, that, guys, if you're not well on the road already with this, you're going to have a busy 3 months. But you should have a lot of this from, doing just good IT security for the last few years. This just brings it all together, and there's probably a few gaps in there that I'm sure there are, that you have to fill. But if you haven't done it already, do the gap analysis, prioritize, and get the important stuff done at least before January the 17th next year. Okay, I know that was a whistle-stop tour. I hope it gave you some insight, and maybe if you're not the IT person who's dealing this on a day-to-day basis and you wanted to get an appreciation for the pain that IT people are going through at the moment to comply, well, I'm sure you got that. So I'm joined now again by Fiona. Thank you, Fiona. And if there are any questions, you can put them into the Q&A is probably the best spot, and we'll take them. I'm going to ask Fiona a question and say on the exempted. Fiona, from your reading of it, you know, who is exempt? Who doesn't have to comply with the 303? Oh, we actually have a question, but maybe you take that one.
Okay, so just I'm looking at the question here. So we will send the slides after the call. Mairead will send them out in the next 24 hours, I would imagine. Who is exempted? So they're very specific about who's exempted. So small and non-interconnected firms. That means investment firms that meet the conditions laid out in Article 12 of the Investment Firm Regulation. There are 9 criteria, all of which you must meet to be exempt under that. Then you have payment firms, which are exempt under the Payment Services Directive. Institutions exempt under the Capital Requirements Directive. That's where the member states haven't applied DORA, a particular article. So, you know, read the small print is what I'm saying. Electric money institutions then under the Electronic Money Directive, and then small institutions for occupational retirement provision. That's fairly straightforward by comparison. It's an occupational retirement pension scheme which has less than 100 members in total. So that's, in a nutshell, what the exempt firms look like.
Thanks for that. In the meantime, we have a few questions. How can calQrisk help with the ICT register? Happy to take that offline as well, but very briefly, in our system, we allow you to record the third parties and all of the detail that the EBA and CBI are looking for, record the business processes or functions or services, we call them, and then the activities associated with those services. And if you record all that information in the system, we have built in now the system reports to generate a text version of the register of information and a one with the codes. So replace the, you know, Ireland with EBA, IE, whatever the code is for Ireland. So happy to have a conversation afterwards. I'm a fund manco in Ireland. We have a delegate US investment manager for an Irish fund. Are they exempt? I'm going to ask Fiona to answer that one.
I couldn't say. You'd have to assess your, you know, there are a third party. You have to assess them. Are they critical to your services? My suspicion is that they are not exempt.
But if they're not ICT, if they're it depends on, I suppose, what ICT. If they're using ICT, that is, if it's a critical function, yeah. If it's their ICT, yeah. If they're using systems that they're controlling, yeah.
Yeah, because, you know, if they're providing a service, okay, they're outside of the EEA, the EU, but I would imagine they'd still be in scope. But I can't say for certain. That would be an assessment you'd have to do in-house, and maybe talk to the regulator, you know.
For organizations without physical infrastructure or legacy systems, is there a requirement to document that these are not applicable to the firm, or can they simply be excluded? For organizations without physical infrastructure or legacy systems. I'm trying to imagine an organization that doesn't have any systems. You mightn't have the physical infrastructure in your building, but you might have the infrastructure in the cloud. I mean, you might have to give us more information on that, but I would imagine if you have a critical service that is supported by IT, and I imagine you have, that's included. But maybe if you have some third parties. No, I'm trying to see how you can have any function without IT. If it's critical and there's IT involved, it's critical. We'll read the next one. Maybe they'll come back with more detail. Do you have any insight on how firms are expected to test third-party exit strategies? Haven't prepared it for this one, but we'll be doing third parties, I think, is the next one. And I will look at that. I don't know, to be honest, but I will look at that for the next one. Certainly, we'll comment to that on the next one.
Well, if you have a look at, the Joint Committee's paper 2023, number 85, that has information in relation to all contractual arrangements on the use of ICT services provided by third parties. So that might be your first port of call. And as Jerry said, it'll be addressed in a future webinar.
And there's a comment. The context is that the system use only cloud-based systems. That doesn't make them exempt. I mean, if they're cloud-based systems, they're in somebody's computer room. There are physical systems there that can be hacked. Now, if they're in AWS, it is a secure environment, but still, if it's a critical service supported by IT, then it's in scope. I mean, the way I see it very simply is, if you have a let's say for the register of information, if you have any critical service that you're providing that involves a licensed activity, and there's some third-party ICT that you're dependent on, that information needs to be in that report. If it's not licensed and it's not a critical or not a critical service, then it's probably not going to be in the report.
Jerry, I wonder would it be useful to make the point that it's not whether the ICT service is critical, it's whether it supports a critical function within your organization.
Correct. Yeah. That's what I was trying to say, that it starts with, I suppose, a licensed activity that is part of a critical function and supported by ICT, then the ICT becomes critical and has to be included by association, I guess. We're saying this, I think we're saying the same thing.
Yeah.
Patrick, it would be great for the next session to know if joint scenario testing is required with vendors, please.
Yeah, you've got to include your third parties in your
I was going to say you got to include them, but whether it's joint or whether, I would say, why wouldn't you do it? I mean, I would try to replicate the reality as much as possible. But I will look to see if it's actually in the regulation of that detail. But I would be recommending do it anyway, because these sessions, you will learn from them, honestly. And if you have that opportunity to do joint test, certainly do that. Just looking at the questions.
I think you got them all.
There's one I thought of, if I can ask you a question, Fiona, and that is the RTS just came out recently.
Yeah.
And there's a lot of requirements in it.
Mm-hmm.
Do they become applicable on January the 17th as well?
They do. So they're in force 20 days after, which is the general standard is if there's no date on it, it becomes applicable 20 days after it's published in the official journal. But because these are all tied into DORA and that doesn't become applicable until the 17th of January, by association, these ones will become applicable on the 17th of January as well. And there's a lot more of them. 2241774 isn't the only one. There are another 2 published already, and then there's another 5 to come. Well, there are more, but a lot of them apply to the regulator and the overseers and things like that. But as regards to financial entities, there are about 5 more
to come.
Yeah. Well, no, they're available
there.
as but they're only joint committee papers at the moment, in draft form.
it seems a big expectation to expect that people will be ready for January if they're not published yet. No?
Well, they're available. So, and we in calQrisk have we've used them to create the checklist to do the analysis, and since we started the project, the first 3 were published, and there weren't any material changes to them. So I don't envisage any huge material changes to the current draft.
Okay.
Papers.
All right. So they're saying you've no excuse. You've known about it long enough.
Yeah.
Okay. I see Jared has asked a question. Do we have a clear view on the number of policies which require board approval? Haven't done a count, but certainly going through the documents the last few days, there's a lot of policies. What's your feeling, Fiona? Do they all have to be board approved? Or is it a senior management thing?
Given the, I wouldn't use the word severity of what could go wrong, I would imagine that they would have to be board approved. Even before DORA, the likes of your business continuity policy or
outsourcing policy.
Outsourcing, yeah, they would all be. We would have recommended them be board approved. So I can't imagine this is any different. They may not specifically say so, but I
might do a count on the number of policies that are actually in it. Might be an interesting statistic. So thanks for the question. But Patrick, can we get a list of the 93 requirements for the exempt firms?
You can if you buy calQrisk.
Yeah, we have them. Okay. All right.
They're in, if you want to have a look, they're in the Jerry had it on screen there. It's Commission Delegated Regulation 2024/1774, and it's Articles 28 to 41. So you'll find them there.
Thanks for that, Fiona.
Okay.
If there are no more questions, I'm going to close this. We said we'd give it 45 minutes. It's been an intensive, well, the first half hour it was intensive, but I hope you got a sense for the requirement, and it's not light. I just hope you're well on the way, and that you will meet the requirements by January the 17th. So thank you, Fiona, for your contribution, and always good to have you on board. And thank you for attending. We'll see you again on November the 14th. I'll
confirm that anyway.
We'll confirm that in the email to you later. The 5 pillars. November the 12th. Okay. Thank you. Bye-bye.